Good morning, everybody. This is the Live Market Open for Monday, November 23rd. I'm Yohay, Elam of Forex Crunch and Market Movers, doing the show as usual for FX Street. I already had some movements early in the day and developments over the weekend. This week is Thanksgiving Day. As always, we'll cover recent developments in the markets. You can see the chart here. Recent developments, markets, charts, and levels. The next 24 hours, and of course, your questions. If you can't see the chat box under the video, please go to the address here, tlk.io/fxstreet-forex-live-video. Okay, so let's begin. What did we have? First of all, let's go back to Friday. What did we have on Friday? During the show, we had a speech by Mario Draghi, the president of the ECB, European Central Bank. He basically repeated his stance that the ECB will act in December. There's a need to fight deflation, lower inflation, and more needs to be done. Okay, so once again, he repeated what he said, and it's different from some of his members that don't want action, like Jens Weidmann of the Bundesbank. So that weighed on the euro. We talked about that during the show. Good morning, Fabian. Morning, everybody else. We also learned from the meeting minutes of the ECB that basically their stance is the situation is bad, we need to act. And only if things change to the other direction, they will not act. So the default now is for the ECB to act. The decision is on December 3rd. That's 10 days from now. Okay, that's next Thursday. It's really getting closer, and that's weighing on the euro. Okay, let's take a look at the euro before we move to other events. We've seen, now we're currently at 106.29, just around this support level that we've seen last week of 106.30. We've seen the pair struggle towards the weekend. On Friday, it was pushed down, tried to hold there above. After we had those meeting minutes from the Fed, we had some kind of a recovery of euro dollar because the US dollar, because the US dollar was weaker, not because of the euro. Anyway, we've seen the pair gradually fall on Friday, and the Asian session began this week with a fall, went all the way to the very round number of 106. Good morning, everybody. And now it's beginning to climb once again in the European session, but not. Let's see if it breaks above 106.30, which turns from support to resistance. In any case, the lines below to watch are 105.30 and then 104.60, which was the 12-year low. On the top side, we have above 106.30, which is now somewhat weaker. We have 106.70 and 107.10, 107.05, and then 107.60. Okay, so these are the lines to watch there. Just as the show began, we had some data from France. Data from market purchasing managers index for France came out at 51.3 for the services sector and 50.8 for manufacturing, more or less within expectation. So it was a bigger disappointment for services, but manufacturing came out marginally above expectations, and manufacturing tends to have a bigger impact. Okay, so all in all, it's mixed. Maybe that's sort of giving some support to euro dollar. And during the show later on, we have the German manufacturing purchasing PMI, and that's expected to come out exactly the same as last month at 52.1. Okay, so that's the most important figure out of all the PMIs. We have 6 PMIs: 2 for France, 2 for Germany, and then 2 for the eurozone. Manufacturing and services. Manufacturing is more important, and for Germany it's more important, especially as Germany really manufactures lots of stuff. Okay, so we'll follow that along the show. Could give us an indication about what's going on with the eurozone economies, what's going on with specifically in Germany, what's going on regarding the confidence of businesses looking forward. These are forward-looking indices, and specifically these are numbers for November. What's going on towards also after the Volkswagen crisis. So far in October, we haven't seen an impact. Let's see if we have it now. Anyway, talked about euro dollar 106.32, and Draghi talked on Friday. Okay, what else do we have on Friday? Canadian data came out mixed, worse than expected retail sales, but better than expected inflation. That sort of left the loonie a bit in the middle, but we have impact from oil prices. Currently, dollar CAD at 133.86. It really touched on 134, getting higher, mostly because of oil prices. We've seen this sort of false move higher, false break higher in WTI on Friday on thin liquidity, but now oil is falling once again. So with dollar CAD, the high to watch is of course 134.60, which was the 11-year high on dollar CAD. And then the downside we have, I would say here, 133.70 works as some kind of support. Okay, so this also happened on Friday. What else did we have on Friday? We had Fed speakers. Well, we had Bill Dudley, number 3 at the Fed. You repeated, yeah, we're moving towards a rate hike. We also had John Williams of the San Francisco Fed, used to work with Janet Yellen. He talked over the weekend while markets were closed, and he said there's a strong case for December hike. He's not really a hawk, he's more in the middle, or a dove if you wish, and he also made the case for December. So all in all, last figures we have, this is from Friday, the implied probability of a rate hike, almost 74%. So markets are beginning to believe more and more, bond markets as well. Also, if you look at 2-year yields in the United States, they're climbing higher, okay, and while they're falling in Germany. So this is also pushing euro dollar lower. Okay, so anyway, the implied probability of rate hike on December 16th is already a bit higher. It was 67-70% last week, most of the week, and it's closed on Friday at 74. Another chance for a rate hike in the United States. What else do we have over the weekend? Yeah, it's still going on in Brussels. It's the capital of the European Union, and the capital city of Belgium. The city is in a lockdown. That means that the metro system is closed, shut down. Schools are closed today, Monday. There's a manhunt for a few terrorists who are involved in the Paris attacks. Now, last thing I read is that the rumors that they fled to Germany. In any case, the story is still going on, and this already has some kind of economic impact, because if you shut down a city, if economic activity is depressed, it already has an impact. So usually if you have, big events, some kind of terror attack or bad weather, things like that, and you have a temporary pause in economic activity, and then following day or once things get better, it moves away. But if you have already 9 days since the Paris attacks, or 10 days, and more things are more continue to go on, and there's more fear about closing borders and things like that, it could eventually have an impact. It's not a story to fade away anymore. Okay, we talked about that also in the latest podcast on market movers. Anyway, that's also some news worth watching, not only from a news perspective, but also from an economic perspective. Okay, what do we have today on the agenda? French PMIs, we've seen them, worse than expected services, better than expected manufacturing. Manufacturing more important, small beat there is better than a bigger miss on services. As I said, German PMI is more important, especially manufacturing, and Eurozone PMIs at 9 GMT. Usually there aren't big surprises from the Eurozone PMIs, and they're less important because we have the data out for France and from Germany. Okay, at 3 GMT we have US existing home sales. Let's see what's expected there. Yeah, we're expecting a slide from a high of 5.55 million to 5.40. You can see here the boom and the bust of the economic crisis, and then some kind of first recovery, slowdown, and now second recovery, and things are looking quite good in the housing sector in the United States. Existing home sales are the vast majority of transactions. Okay, these are sales of second-hand homes. Okay, so most people buy homes that already exist. They don't buy homes on paper. So on one hand, it's more important because it's bigger than the quantities here are bigger than new home sales. On the other hand, when there is a sale of a new house, it means construction, it means roads, it means schools, it means commercial areas, everything. So we have new home sales later this week, and it also has an impact, even though the numbers are only about 10%. Okay, with existing home sales, we have they're released later on today. What I want to say for both figures, these are annualized figures. So it's not that 5.4 million homes were sold or expected to be sold in October. It's an annualized figure. It's multiplied by 12. Okay. Anyway, this is another event today. Let's talk about a few currency pairs. And of course, looking forward to your questions. Euro dollar, let's take another look at that. Continue. No, it's at 106.27, struggling with this 106.30 line. Let's see what's going on over there. Pound dollar certainly suffered. It made a nice move higher. No apparent reason for selling the pound today. Just this general US dollar strength that began at the Asian session. Well, also a bit late on Friday, but we've seen the break last week above 153 when the Fed meeting minutes showed us that there was nothing new. Last week, let's talk about that just a bit because it still has an impact. Okay, what we've seen last week is that the meeting minutes from the Fed, the FOMC, basically told us what we already knew. They told us that the Fed in October did want to give us a hint about the hike in December, and the message did pass along on that meeting on October 28th. So there wasn't anything new. And of course, we know that also in the FOMC, there are more or less three camps. The hawks want to act now. We know that one member already voted for a hike. That's Jeffrey Lacker. The majority, like Yellen, they want to act in December, data dependent. And there are also a few doves that want to act only in 2016. Okay, but yet again, we already knew that. So there were high expectations for these FOMC meeting minutes. And when we had no news, nothing really extra hawkish, then we had a sell-off of the dollar. But it took some 24 hours, and then we had some kind of recovery because all in all, the direction of the US economy is positive. The direction of the Fed is to hike the interest rates, and that's what we're seeing also now. Okay, it's not a one-way street, never a one-way street, but this is what we're seeing now for pound dollar, supported 151. Now struggling with 151.60, next line 151.10, and then 150.50. On the top side, 152, 152.50. We had last week some kind of nice range trading, and then we had it make a move higher on that weakness in the US dollar. Now moving back down. Remember, for the UK, in the UK, they're expected to raise rates after the Fed. So all in all, it's not, the pound is not the weakest link here in the currency world. Okay. Dollar yen. We've seen dollar yen also last week's slide. 122.75, 122.70 was support. Now back to around 123. Still struggling with these levels, 123.20, some kind of resistance. Much more important resistance is at 123.60. That was the post-NFP high. We had a break above that line, but we never went too far, so I would fade that. 123.60 is the line to watch, and on the downside, 122. With this gradual fall right here and the second fall, we never got even close to 122. So all in all, we're seeing some kind of bullishness also in dollar yen. You're welcome, Fabian, and welcome to ask more questions, of course. Let's move to dollar CAD. We talked actually about it before. So we're still on high ground, 134. begins to shape up as resistance, right? At least today, at least now. 134.60 above it and 133.70 below. Let's take a look at oil prices. We had this extreme, yeah, see 134.60 on dollar CAD is resistance. 133.70, 132.80, and 132.40. I read a note from CIBC, a Canadian bank. They talk about dollar CAD reaching 136. Okay, they're not the only ones, of course. Oil prices currently, WTI, West Texas Intermediate crude oil at 40.60. Back to the range. We've seen the price of oil jump late on Friday on thin liquidity above this 42.50 resistance level. Look, this was support back here in late October, and then resistance. That's a false break on thin liquidity. We're back to range now. All in all, between 40 to 42.50. We have an OPEC meeting next week. They're not expected to cut production. There's too much oil in markets. Iran is going to come back online as the sanctions are lifted. What else? Eventually, what goes down must come up, but there's so much downside pressure on oil prices. It also puts, well, it began last year with, for a few reasons, but the shale industry in the United States began producing more oil, and then the big impact on the big blow for oil prices came when OPEC, or mostly Saudi Arabia, decided not to cut production in the OPEC meeting last year, late November, just around Thanksgiving in the United States, and that really gave a blow to oil prices. Saudis want to maintain their market share, and I think they are managing to maintain their market share, but they're suffering, of course, losses because oil prices have been low for a long time. Now, so far they have enough money. It's a very rich country, but at some point they'll have to begin cutting on their expenses at home. And they have the Saudi Riyal. Doubt that anybody's trading that, but well, it's not worth trading because it's pegged to the US dollar, and there is a risk that they will depeg it next year, and that could, of course, cause some turmoil. Okay, that was sort of subtopic about Saudi Arabia. Anyway, let's talk about dollar CAD. We talked about that. Aussie dollar. I used to be more bearish on the Australian dollar, and that's because of China. There were more worries about China, and there are still good reasons to be bearish because commodity prices are falling. It's not just copper or iron ore, it's also nickel, it's also other not precious industrial metals. So that's a reason to worry. On the other hand, the economy in Australia is not doing that bad. We had a good employment report 2 weeks ago, and we had the RBA, Reserve Bank of Australia, basically satisfied with the level of the Australian dollar. Of course, they may change their mind if commodity prices continue falling, but all in all, we've seen the stabilization. We've seen it bounce off these lows at 70, climb up the stepping stone of 70.65, of 71.60. We're currently close to this level. Above that, we have 72.20 still and 72.80. All in all, it's quite, the Aussie dollar is no worries at this moment. Kiwi dollar has been a bit more mixed. Milk prices are falling. The employment report in New Zealand wasn't that good. So it's a bit more mixed, but the economy in general is doing well. 65.22, 65 is support, followed by 64.50 and 64.25 on the top side, 65.80 and 66.15. A question from Fabian about what are the currencies most influenced by oil at the moment other than CAD? Well, other currencies are, of course, either oil-producing nations. So it's Norway. Okay, they're dependent. The Norwegian krone is dependent on production in the North Sea, despite the fact that their economy is more diverse, and it still moves by oil prices. And of course, the Russian ruble. That's also an oil-producing nation. Also, they have other things in their economy, but regarding the currency, that has a huge effect. So that's why we've seen also the Russian ruble tumble. Also, the moves were much more dramatic around this time last year, around December, around January. So these are the most vulnerable currencies among developing nations. Of course, there are more countries: Nigeria, Venezuela, Middle Eastern countries. Indirectly, the US dollar is also impacted because prices of oil are in US dollars. So there is some kind of correlation. There is a correlation when we see falling. There is a correlation between falling oil prices and a stronger US dollar. Okay. Yeah. Dollar Swiss, not my favorite. I say it each morning, but yeah, 102 is resistance, turns into resistance after capping this pair. But remember, there's a lot of intervention. The Swiss National Bank does not like strong Swiss franc, especially with the falling euro. They said over and over again that they're ready to act, and that's so far weaker euro. That means weaker Swiss franc, and that means that dollar Swiss is moving higher. Euro Swiss, here you can see how tight they are, despite the fact that there's no peg anymore since January 15th this year. We're seeing ranges quite tight: 108.30, 107.60 is support, and all in all, quite tight over there. Okay, Euro pound, sorry. We talked about this line of 70.20. It's working quite nicely so far, quite narrow range between 69.80 to 70.20. I mentioned that this round 70 number does not work as support or resistance, and actually works. 70.20 is the line to watch, 69.80 below, and 69.40 on the top side, 71.40. I see more questions. What about AUD and NZD? Well, the Aussie and the Kiwi are influenced by other commodity prices. Of course, there is some correlation between all commodity prices, but and China is, of course, the link in many cases, because more Chinese demand means more Chinese demand for oil and for metals that Australia extracts, and for milk as well. But it's not always the same. Okay, so yeah, so when we have all commodity prices moving in tandem, then stronger commodity prices stronger oil impacts positively the Kiwi and the Aussie, and the other way around. There's also this correlation between oil and the dollar, inverse correlation. So to answer your questions, are they not influenced by oil? Are they only influenced by gold or more? No, the Aussie is mostly influenced by copper and iron, and the Kiwi from milk prices. So we had an auction last week and the milk prices fell once again, the global dairy trade GDT price index, and that impacted the Kiwi more than anything else, because New Zealand, and especially the company Fonterra, they export dairy products. It's also baby powder, cheese, anything dairy related. Okay, and Australia, iron and copper mostly, but also other metals. Question from Jax: if the S&B always intervening, doesn't that make Swiss pairs more stable to trade? Yeah, very stable, but also very frustrating, and you never know when they're intervening. So I wouldn't. I don't know. Maybe the lines here in dollar Swiss are more interesting to trade than euro dollar. If you want this if you like these charts better, but to trade the euro Swiss is a bit frustrating. Yeah, maybe there is a potential. Let's say buying euro Swiss around 107.60, 107.80, and expecting it to move higher thanks to the S&B, but there's a limit here in the number of pips you can take, and you never know when they're going to intervene and not intervene. And just remember what happened in January. So we had this pig that lasted 3 years and 4 months, from September 2011 to January 2015 this year. We had the Swiss National Bank declaring back in September and redeclaring it over and over again. 120 in Euro Swiss is the line in the sand, okay? And they managed to hold that pig quite well, okay? So many traders made the bet that it'll last forever, and they were long Euro Swiss. And then what happened on January 15th? There was more pressure. The euro was weakening. Draghi was talking about making a move on QE, and 7 days exactly, just 1 week before the ECB made its move, the Swiss National Bank decided to call quits on this pig. Euro Swiss fell, depending on which bank, fell to 85 cents, fell to 102, and then, of course, many positions were liquidated, and a few brokers also went under. So you never know. It was big time. It was very, very dramatic month in the Forex markets and Forex industry as well. So I personally don't prefer free-floating currencies. Okay, let's go back to the charts and see what more questions we have. Yeah, that's history. Yeah, that's history, but history can repeat itself. Let's talk about another thing, that speculation in markets. Yeah, I'm not trading yesterday, I'm trading today, but you have to be aware of the history of what happened with the Swiss National Bank to understand that they can act surprisingly, and it can be a bit messy. Another thing I want to talk about today is rumors in markets that we have for today. The Fed has a meeting today, which is in closed doors at 11:30 Eastern Time, which is the 4:30 GMT. Okay. And there are rumors that in this decision, they'll maybe hike the discount rate, or perhaps prepare markets even more for a hike, or perhaps surprise us and hike now. Okay, lots of rumors. I didn't mention this at the beginning of the show because I'm a bit skeptical about this thing. I'm a bit skeptical that the Fed will act, and if this meeting is meaningful. The Fed meets all the time, apart from rate decisions. This is a meeting only of the Board of Governors, not the full FOMC, not the regional presidents, not voting. So it's, of course, the higher ranking members, Janet Yellen, Stanley Fischer, Bill Dudley, and their colleagues. And because there's lots of tension in markets, many believe that in this decision, they'll announce something. Okay, so just be aware that there are rumors. Be aware that the meeting is held at 4:30 GMT. I don't believe we'll have anything. I'll keep you updated tomorrow on the show, of course, and keep your eyes open. But perhaps the Fed is behind these rumors, ignites these rumors, and as another preparation for raising the rates on December 16th. So we have, let's go back to these probabilities right here. 74% for a rate hike. Maybe these rumors will contribute to the chances, the implied probability rising to 80%, 85%. Okay, more preparation for markets, but I don't believe that these rumors are substantiated. Okay, just be aware that the rumors can have an impact of their own. Questions about any currencies? We will talk about the next events for the week. All right. Euro dollar, just let's take another look. 106.36. Oh, we have just now the release of sorry. Let's see what happened just now. Tick higher because we had the release of German. Okay, we had better than expected figures. Okay, good German data. Yeah, that's right. Yeah. We have the manufacturing PMI coming out better than last month, 52.6 instead of 52.1. Services jumping much more, but remember, manufacturing is more important. So for instead of 54.3 expected and 54.5 last time, we have 55.6, and the composite is higher. So it's all good. German industrialists, purchasing manager, influencers in the economy are optimistic. Perhaps the Volkswagen crisis is not that bad. Anyway, we have a nice reaction on your dollar, or more than minimal reaction. We reached 106.40, almost, ticking a bit up and down. Anyway, we're seeing the euro recovering in the European session with these good figures after falling beforehand. Okay, mostly in the Asian session. The trend remains down, but there are always these kind of movements in both directions. So I think we still have the Eurozone PMIs at 9 GMT, but they're not that important, okay? So now that we have the French and German data out, and both, especially the German data is good and French manufacturing is good, then it's sort of supporting the euro. Okay, let's talk about more events that we have this week. Talked about it also on Friday and now again. Everybody also had a nice weekend. We have, okay, the Eurozone PMIs now, basically positive. Existing home sales later today. They're expected to show us a small slide. Tomorrow, more data from Germany, German IFO business survey. IFO, well, whatever you call it, it's the #1 think tank in Germany. A bit conservative, but their survey is very wide, and it has a lot of influence. Okay, so this is more regard than ZOO. It's expected to drop just a bit. We'll talk about it a bit more in detail tomorrow. The big event of the week also comes tomorrow, the second release of US GDP, gross domestic product in the United States. Let's take a look at the numbers we're expecting tomorrow. So we're expecting, where did that run away? Yeah, we're expecting an upgrade of the data from 1.5 to 2%, mostly because of inventories. Inventories were a huge drag on GDP in the first release, and now they're expected to improve because we have new data coming out. We had new data already coming out. Lots more releases also tomorrow at the same time, and later consumer confidence. On Wednesday, it's a very busy day because it's the day before Christmas Eve. We have durable goods orders, which is an indicator for investment, core PC price index, which is an indicator, the Fed's favorite inflation indicator, and jobless claims coming out on Wednesday instead of Thursday because of the holiday. So it's a mix of everything: jobs, inflation, investment, and everything. We'll talk about that, of course. Thursday, it's Thanksgiving in the United States, and also in other places we just don't have too many events. And Friday, it's Black Friday. I know that also in the UK, there's been some crazy shopping last year and people pushing each other. Anyway, so it's not only an American thing anymore. We have GDP on Friday in the United Kingdom. No changes expected. Perhaps we'll have a change in the future now with the government doing these spending cuts in the UK, or announcing them at least. Anyway, this is the last full week of November, and we have this Thanksgiving holiday. Markets in theory are more quiet. One Eye is also on the news about terror, about other things, and next week is so busy that perhaps this is a week to relax, but doesn't mean that markets will relax, okay? So euro dollar looks upbeat, 106.38. Do you have any more questions? More currency pairs you want to cover? Other events? Maybe we'll talk a bit about the ECB meeting next week. I mentioned next week we have a very busy week. That's because of two main events, ECB meeting on Thursday and non-farm payrolls on Friday. These are planned events. The ECB is expected to act. There's hardly any doubt about that. They can act in a variety of manners. They can, of course, extend QE to be forever like the Fed did. I mean, until further notice. Expand QE beyond 60 billion a month. Lower chances. Open the door to cutting the deposit rate. Higher chances now. And of course, promising to continue acting. They expressed worries about inflation, worries about the exchange rate, and talked about acting. Draghi said, use the word vigilance, which implies action. Okay, so since then he also repeated his stance, and since then we already know that they're very worried about the trajectory of inflation, not only current inflation, because if you look at current inflation levels in the Eurozone, of course, headline inflation is no surprise. It's around 0, minus 0.1, plus 0.1 doesn't make a big difference. Core inflation, actually, it's ticking higher. It was upgraded in October from 1% to 1.1, but it doesn't. But what the ECB sees is worrying for the ECB because they see that the fall in oil prices, energy prices, is beginning to make its way to other prices, and that this deflationary mindset is beginning to take hold. Okay, so that's what Draghi expressed. We don't see it in the numbers of month over month core inflation, but that's what he's worried about, and that's why they're expected to act. Okay, so that's about the ECB. Have any more questions? Of course, we'll talk about every event more in detail. Euro dollar in the meantime is slipping a bit below. Pound dollar stabilizing, dollar yen stabilizing. Euro yen, we didn't talk about that. We had it fall to 130.57, currently getting closer to 131. Well, the euro is strengthening on this good news. It fell to the swing low of 131, 130.60. So that's the line I put here. On the top side, we have 131.50 and 133.15. On the downside, of course, we have the round number of 130. Pound yen. Well, here we had this false break, if you wish, head and shoulders pattern, and then fall back down. It's getting closer to support at 186.20. Below that, 184.50. Resistance remains at 188.10, which was the high in September. Question: why did the Fed meeting you just mentioned today is not on the calendar? Well, it's not on the calendar because the Fed meets so many times in closed meetings and releases the notes that it's going to meet. And I didn't see that as important as well. I'm not following these closed meetings. I don't have it on the calendars, not in FX Street, not in others. What we do know is that there were rumors that this is an important meeting. Okay, maybe the Fed ignited these rumors. That's why I'm mentioning it despite the fact that it's not on the calendar. It's probably meaningless, but since there are rumors, that means that markets also move because of these rumors. So if we will have something out of this meeting, the next closed meetings will also, I believe they will appear on all the calendars because markets will be watching. But basically the Fed, the Board of Governors meets all the time. Sometimes they discuss regulation, sometimes they discuss community banking, sometimes they discuss monetary policy. Anyway, they don't meet just every once in 6 weeks, and other than that, they keep silent and keep on doing the research. They do talk with each other. I don't believe we'll have a leak. We know that the outcome will be known. Let's Let's go to the Fed website. I'll try to find that for you to see the note of this meeting. I can try to find out news and events. Okay, these are the main events. No, I can't really find that quickly. I can just tell you that we have here the speeches we had about the Fed monetary policy. Anyway, they do meet and they do announce their meetings. It's part of their transparency. Anyway, it's can't find it quickly. I'll maybe look for it later on and put it on the chat here. But if you look at their calendars, you don't see this meeting as something special. Okay. Question from Alexei: a negative house sell in the US should mean that euro-dollar should go up around 50 pips. I mean, at least to 107.10. Yeah, it can go to 107.10. Yeah, but it's not the most. It's this, I would say, second-tier figure. Okay, we'd have to have a huge disaster in that to see the pair to have a meaningful impact, because new home sales, because they create more economic activity, have more of an impact. Okay, and also because the general trend is to the downside. We'll have to see, let's say, existing home sales today fall below 5 million to sort of give us a shock, to shock the US dollar. Okay. Anyway, that's what I see. Okay, more questions? So yeah, 107.10 is resistance. And then 107.60, but don't expect any huge movements, let's say. More questions? I'll begin the wrap up. Yeah, I think I may be able to. Yeah, here we go. I found this Fed-related stuff right here. Okay, I'll put it here also in the chat. So you can look at yourself. If you only read this note, it looks significant. Okay, review and determination by the Board of Governors of the advance and discount rates to be charged by the Federal Reserve banks. A final announcement of matters considered under expedited procedures will be available in the board's Freedom of Information and Public Affairs following the closed meeting. Okay, so it looks a bit dramatic, right? They announced this closed meeting. Okay, board meeting. But if you look here, if you click on this link of board meetings, you see that they actually have quite a few of these. And if you browse back to October, September, you have here the whole archive. You can see that they meet quite a few times. And I believe they might have created these rumors to raise the speculation for December rate hike, but I don't think we'll have action today. Okay? Okay, let's begin the wrap-up. So this is the wrap-up for the live market open on November 23rd. We have a stronger US dollar in the Asian session, following the trends from last week. Developments, we had a weaker euro also because of Draghi. Mario Draghi said that he's ready to act in December. Nothing new, but more determination. That weakened the euro. Canadian data on Friday was mixed. Canadian dollar seems to be falling further, mostly due to pressure on oil prices. WTI is still failing to really make a significant bounce above 40. Fed speakers over the weekend continued making the case for December. We have a 74% chance of rate hike according to bond markets. Let's see how this implied probability develops. In other news, we have a lockdown in Brussels. Metro schools are closed there. I'm mentioning this because we're beginning to see the beginning of a significant economic impact because of the Paris attacks 10 days ago. Okay, today we had PMIs in the Eurozone. They came out better than expected. So we have French manufacturing and German manufacturing and both services rise, and this supports the euro. The euro dollar is now recovering. I'll show that chart immediately. Existing home sales is the next significant release for today. It's expected to slide just a bit. Second tier event. Okay, euro dollar fell to 106, the round level below support at 106.30, which now is a bit shattered. 106.70 further resistance, 107.10 support, 106 and then 105.30. Pound dollar also suffering from the strengthening of the greenback, struggling with 151.60, further support 151.10, 150.50, and resistance 152, 152.50 and 153. Dollar yen found its support there at around 122.70, currently above 123. Significant resistance at 123.60. Dollar CAD touched the 134 line, support 133.70 and 132.80, 132.40. Strong resistance at 134.60. Look at oil prices for the direction for the loonie. Australian dollar relatively resilient, 71.73, resistance 72.20, 72.80, support 71.60 and 70.65. Kiwi dollar in range between 65 and 65.70, further support 64.50. And that's it for currency pairs. All in all, this week it's a crammed week of US releases on Tuesday and Thursday, and then we have Thanksgiving on Thursday. Sorry, Tuesday and Wednesday, and then Thanksgiving on Thursday. Anyway, that's the wrap up for today. I see we have a few more questions, so let's address them before we head off. Did you manage to see what pairs to watch today? Euro dollar, because of the events in Europe and in the United States. I see euro dollar many times, but really we don't have any significant events from the UK today, or from Australia, or from New Zealand, or I don't know where. So that's interesting to watch. Thanks for your kind words, so Alexei. Question from Fabian: do you consider the bearish engulfing from the euro dollar on daily signal to enter, or do you not consider candle formation? I mostly follow fundamentals, and regarding technical analysis, it's more support and resistance. But what you can do, Fabian, and also all the rest, you can, if you have a chart, you can put a link to that chart on the chat box, and then you can see. Then you can we can talk about that, share it with the other members on the screen, and try to analyze that together. Okay, so you're most welcome to do that in the next shows. I thought I put the link to the Fed stuff and it disappeared. I'll try to do that again. Anyway, this is the link to the Federal Reserve, the meeting of today and other meetings. It looks dramatic, as I said, but if you look at other at the whole calendar, it's not that dramatic. I believe they're so sowing the seeds and creating those rumors and sort of lifting expectations. I'll be following, in any case, this, apart from currency charts, I'll be following this implied probability, 73.6 today. Let's see where it is tomorrow. Okay, so that's it for today. I wish everybody a great trading day, great week, and see you tomorrow. So thank you and bye-bye.